Good morning, everybody. This is Patrick MontesDeOca with the Equity Management Academy live trading room. We're into a fast market to the downside here. Just taking a look at some of the markets here. The report that came out, which really affected the market here, was retail sales unexpectedly jump in sign of resilient economy. So we're getting a lot of conflicting signals here, economically, fundamentally, and it's making obviously the market pretty nervous. Particularly in the precious metals. One of the comments here that I've been making for the last few months is basically that the fundamentals do not apply to what's happening here to the market. The market in gold in particular, or precious metals, gold mining shares, basically went into a correction since August of last year, and we've been in a corrective pattern, and we came down to a Fibonacci retracement, 61.8% retracement, which represents about 1677 in that vicinity. And coming down today, we basically are simply following the wave patterns here that happened in the market here. I want to refer to an article that we published in Seeking Alpha. Basically, the article came out just a few days ago here on the 12th, and one of the things that I did here on this article is pretty much look at the 360-day cycle, and the analysis basically that the VCPMI gave us was the market came down to the annual 1771 level and reverted to close above the annual mean of 1810. It is still within the range to complete the annual pattern a week earlier or a week later. The initial confirmation that this bottom is in place is a rally from the current levels of about $30 to $40 initially, or a close above 1810. 1791 was the buy trigger and 1810 was the target. 1810 is the annual average, and it's a pretty important pivot point, that if the market trades above, it's bullish, below, it's bearish. So we've been trading in that range, which is really a choppy area, and that's what the VCPMI pretty much indicates. The indicator indicates that when the market is trading around the average price, that you want to be neutral in that sense, because it's a choppy area. If it closes above 1810, then we are off to the races to about 2164 to 2442. Now, a test of the resistance at these levels into the September 14th, 15th of this month, and subsequently a retest of the current lows into the 28th of this month would be a perfect picture for the next 2021, for the next 2021-2022 annual bottom pattern to be completed for our next calendar year, beginning September 28, 2021 to September 28, 2022. and 22. If we take a look pretty much at what's happened here in the gold, we've come down to this weekly buy to level, which was indicated in between 1770, 1752. This pattern was completed. Now, the market came up to 1810.60 on the 14th. Completed that 1810 target, and then it was expected up here that this area is a strong area of resistance. As you can see, the algorithm identifies it in red. And it's telling us that this is a high probability area that you're going to find selling or pressure or supply. It doesn't tell you how much supply may come into the market, but it does tell you that it's a high probability area where you're going to find sellers, supply. So it completes the target and it goes neutral, and then it activates a bearish signal by the close below on the 15th at 5:30 a.m. And it comes down to complete the extreme below the mean on the daily, which is the numbers on the left that you see that it broke that support, and it came all the way down to test now the buy 2 weekly level of support. This level represents, now, if we get a confirmation of a buy trigger, which is the close above 1752, and we use the 15-minute bar, so we're looking for a close above 1752 to activate a buy trigger in gold from the extreme level below the mean or the second level of resistance. So be prepared to buy on a close above 1752. This is the October contract, and for day trading purposes, we have a position on the December, so we're going to be trading on the October contract, and we're going to be buying at the market. Just buy one at the market, an aggressive buy trade, buy one at the market. Buy gold at the market. All my traders in Discord, buy gold at the market. you can use the maximum dollar stop according to your profile. This is a very high probability where we can expect a reversion to unfold. The silver has not yet triggered a buy signal. We're looking at a potentially major reversion unfolding. The target is 1770, the initial target. $17.70 is the initial target. We seem to have a lot of sell-off on most of these markets across the board, including digital currencies. $48,600 was the high made so far for Bitcoin. And we've coming down into this average price weekly of 47,328. So a little bit of a correction here across the board, it seems. This is the supply that was expected when it got up to about 1810, 1805, 1810. And now, since we traded at the extreme below the average price, at the extreme level of support, mathematically speaking, the algorithm identifies these levels in a probability model that identifies for us basically where the highest probability is to buy and enter the market. So one of the comments again that I made earlier is that the gold market is trading completely the opposite of what the fundamentals indicate to be. You know, we have one of the most bullish fundamentals in the history of this markets, and the price of gold is trading at $17.50, and silver trading, you know, at $23 or $24 an ounce. In fact, I just went out and I bought some more physical silver for my account. These prices, in terms of stacking or accumulating, are a great value to have. And, you know, one of the things that made a big difference for me when I go and I buy the physical is that I have it physically in my hands, and I can feel the weight, I can feel the power of silver just in that sense, and it really represents real money to me. Digital currencies are another dimension. It's another form of trading, and it's a brand new. It's the new kid on the block. You know, it's coming in with a lot of challenges ahead, and you know, is trying to legitimize itself in a business that is highly regulated, and you know. It was expected that the lawmakers would look into what's been going on in the digital currency markets. And in my opinion, 80, 90% what's going on is questionable. The power of brokerage seems to be in the hands of few, and if you're going to start brokering, then you got to play in, you know, a fair field, so to speak, and be completely transparent. But so far, as of right now, it is not. And the only currency that seems to be potentially out of the regulation status is Bitcoin. It's completely independent, decentralized of the system, and it's building its own economic system within Bitcoin. And so there's a lot of challenges with regulation, and until, you know, the dust settles down, I would suggest to be very careful and look to at least, you know, trade instruments that are regulated. You know, we have instruments like GDLC, which is a digital fund. We have GBTC, which is the Grayscale Bitcoin Investment Trust. And these are regulated instruments. So if you're looking for the play in the volatility and price, you know, these instruments right now, I believe, are offering the kind of safety that you know, you want to have as a trader or as an investor. We're moving into a highly digital world, and you know, even some of these retail sale numbers that came out, it was done primarily in the digital world. You know, online sales are going through the roof. People are getting used to working from home, and so it's changing the dynamics of commerce. It's changing the dynamics of, you know, pretty much how we run our lives. And it seems that now we don't even have to go out. You know, we can have everything delivered, and we can work from home. So it's changing the dynamics of the workplace and obviously the home place. So I think the markets are still trying to find the calibration, you might say, or the adjustment economically that's taken place. Coming back here to the market, the price has come down to the buy two level of 1752, and it has activated a buy trigger. So what we do here when we get a signal like this, obviously you can, if you enter into the signal, you have three choices of a stop. You have a what I call conservative stop, which is a close below. This level here is your entry point by activating the close above here. So if you entered at this price, you can put your stop at 52 on a close below 52 using the 15-minute bar. That is the first stop or protective level. The second one is a maximum dollar stop that you can carry that is comfortable for you based upon your profile. I personally have about $1,000 maximum catastrophe stop that I run. And regardless of what happens, when I get to that point, I get out and take a look at it, and if it's still like now reverting, or it comes down to a level where it reverts, then I simply take again another signal. But a catastrophe stop is about $1,000 in the futures markets, because you're managing the margin risk, you're managing the volatility of the futures. It's different than a stock or a share that you can afford to hold, or if you are looking to buy multiples, or if you're looking to add or something, that these are levels where you can execute that strategy. And that strategy is applied for stocks or for assets, basically, that are paid in cash. Okay? So let's just continue to monitor the market here. Managing margin is pretty tricky, because even though the market might come down beyond a point where you feel the market is offering a level of support, it can usually go more than that. And most of the time, when you get a lot of speculation into the extremes, pretty much that's what the AI identifies for us, is how far will the speculation go. And that's what these levels indicate for us mathematically, that we have reached weekly about a 95% probability that we could see buyers now come in here, accumulation of supply. But nevertheless, the market can still come down into the monthly numbers. Let me take a look. The 1777, the monthly level, was the monthly average as well. That's why it is extremely important. The buy one level on a monthly basis is 1718. The buy two level is 1619. Now, it doesn't mean that the market has to come down to these levels. When we look at this kind of intelligence, then we see pretty much the possibility of where the cycles are going to end. And I think we're looking at what could be potentially a bottoming formation based on cyclical patterns that fit right into the level of the what the VCPMI identifies to be accumulation of supply. It tells you this is the level where you want to accumulate on the long side. So when we look at the market on a shorter term basis, obviously, it gives us a better picture in terms of the volatility of the market or the momentum of the market. And right now, it appears that it is extremely oversold. So we've come down below the annual average of 1810, below the monthly average of 1777. And the weekly average of 1752 is activating an alert, a buy trigger. So what we want to see is the buyers that congregate at these levels. We want to see some greens, which means that buyers are taking the supply that's being offered here. But what you'll see here, which is really the synergy of this algorithm to the market, which, by the way, this is not 100% guaranteed. We're talking about a probability model. We're talking about a mathematical model. And what this does is it simply tells you mathematically, not only mathematically, but also in a color formation, you might say visualization in blue, where pretty much you potentially are going to identify buyers in the market, and the algorithm will activate the trigger points depending upon the price volatility of the market. And a close above 1752 is activating a weekly buy trigger. So your target for the rest of the day is into that 1770 area, which is pretty much the 20-day moving average, roughly. It's about 1767. So that would be your target for this trade. And let's see what happens here to the market. But I believe that this could be the capitulation for a potential reversion unfolding here that could bring us back up to the mean. These are the levels that identify the extreme levels of speculation. So let's see what happens to the market, my friends. In the meantime, have a great trading day so far today. Be safe, and I'll see you next time.